You're listening to the Infinite Banking Mastery Podcast. Did you know that you could build a tax-free pool of wealth that's liquid and accessible all your life while building your retirement nest egg? Gain full control of your financial future and stop relying on the government and banks. The wealthy have already discovered this wealth-building secret. Now it's your turn to get financially secure without following the conventional wisdom that keeps you in debt to banks. Now here's your host, Valerie LaRocque.
Hello, everyone. Welcome back to the Infinite Banking Mastery Podcast. Thank you again so much for listening in, for being here. I truly do appreciate every listener. You know, I was looking around just wondering what kinds of things do people want to know about infinite banking? And I felt like after doing a search, I thought pros and cons. I think people want to know the pros and cons. So I thought I would do an episode just comparing pros and cons on this strategy. Might help people get some questions answered that they've been wondering about. So I'm going to start with the pros, which is a much longer list than the cons. And first of all, a lot of people out there are talking about velocity banking. I hear this a lot when people reach out. Can I do velocity banking with this? I already have been looking into velocity banking. And that has to do with using your HELOC most often, at least the version that I have heard of. And you can do velocity banking and you can perform that, except for rather than having and using that system through something like your HELOC, where you have the opportunity to use debt against your house to be able to pay things down faster and cycle the money and keep it in motion. Instead, you have the asset of life insurance that's building for you, and you're essentially able to do the same thing. Now, it's going to take a little bit to build up your system, whereas if you go out and acquire a HELOC, you'll have access to a chunk of money right away if you're able to qualify for a HELOC. However, it is going to be much better for you to do any sort of velocity quote banking through a life insurance policy, a whole life contract, than it would be through your HELOC. It's going to be, instead of you just having the opportunity and the option and the ability to use the bank's credit to speed up your debts and pay things down faster, you will instead be building your own asset of life insurance at the same time. And in addition, banks can take away HELOCs or reduce your HELOC or not allow a HELOC, and then that takes away your ability to do that. So velocity banking can be practiced using a whole life policy and the infinite banking concept. Another pro, it would be generational wealth. How do we create generational wealth? And isn't it great if we can leave an inheritance for our children and our children's children? The best way, or one of the easiest, greatest ways, is through life insurance. And so even though you are using this for maybe a different purpose, you're acquiring this policy because you want to use the money and flow it and use the money while you're alive for all sorts of different opportunities. In the end, it will still leave a death benefit. And if you are growing a healthy banking system, you are likely to end up with more than one whole life policy, and it's going to end up leaving as a side effect, or maybe a purposeful side effect, if you actually would like to leave a sizable death benefit to your loved ones, it will end up leaving your family a legacy, will end up leaving that generational wealth. If you are able to then teach your children what you have learned and have them create their own banking policies, or you can help start that off by creating those policies for them when they're younger. And then it just continues. Windfall that they receive when you pass away, they just can build into their own banking system and then leave an even larger windfall for their children. And so this can create generational wealth, which is a really awesome side effect to the infinite banking concept. So speaking about the opportunities that you have with your cash value and your policy, liquidity is another pro. Obviously, this is one of the main things we love about infinite banking, is that it has liquidity, that we can use that money whenever we want or need to for any purpose in our lives. And so liquidity is a big deal. And then alongside that liquidity, that we are able to access that money income tax free all of our lives. And so liquidity and tax free is a big deal, especially with everything else being taxable aside from, of course, a Roth IRA, which does have that stock market volatility. Another pro would be unlimited contributions, or at least that's how we are stating it. Essentially, it could be unlimited. Usually I don't come across someone who's unable to fund at the level that they would like to. And so being able to fund almost as much as you would like to, for most cases, it is as much as you would like to. There are some constraints, but otherwise you have no restrictions like you do with retirement accounts or IRAs, Roth IRAs, 401ks, all those things. You do have limited contributions into those other things. And so with life insurance, you do not. And that's one reason why the highly affluent people really like these contracts, because they can fund them at whatever level they would like to. Another pro that's a big deal in my book anyway, I would say, is that the whole life insurance is not market correlated. So it is completely separated from that. It's not going to be going up and down along with the market or other things that are happening out there in the market. And so that is really great, where you just can have something that is guaranteed and you don't have to worry about those market upswings and downswings. Of course, we wouldn't be talking about the pros of whole life and infinite banking if we didn't mention the loans and all the things to do with that you have collateral value that inside of your policy that you are able to borrow against, the value inside of your policy, inside of your cash value. That is terrific, because you are able to borrow essentially as much as you have in there. And that those loans also are preferred loans, because you are the first person, the insured, to have access to that money before anyone else. Before the company were to do anything else with those funds, you have the first right to those funds. And that's why you are able to borrow against your policy whenever you like. And you are first. You're first in line. Also, flexible loan terms. That is excellent, because this is the only loan where you can be fully in control, the only type of loan. The company does charge interest that you can choose how you're going to pay. If you can pay it monthly, you can pay it annually when they send an invoice for that. You can pay it whenever you want. You can take 5 years off and pay it then. You can pay the whole loan off at any time. There are no penalties. You can pay back a monthly amount and you can amortize it. We can really do whatever you want. Now, of course, I always want to say, when you are doing infinite banking, you would like to create something, pay yourself back with interest. That's how Nelson Nash taught it in the beginning, and that's really going to be in your best interest to pay yourself back with interest, because what's going to end up happening is you will replenish your accounts much faster. That money will be recycled back into your account, and then you can use it again for something else. And then you're able to continue to recycle that money all throughout your life, and then use it again in retirement. So being able to borrow against your policy and take these loans is one of the biggest pros with whole life insurance, and certainly infinite banking, as that's kind of what it's built around, is the possibility and the opportunity to borrow against your cash value. That's what makes it awesome. Another terrific pro would be the creditor protection that it comes with in most states. I did an episode on this, and really it depends on your state, and it's something that you can look into to make sure that the cash value is creditor protected in your state. It is in most states. Another pro would be that the policy is not cancelable. As long as you're paying your premiums, they cannot take it away from you. It is guaranteed, a guaranteed contract. And also another pro, the premiums are guaranteed with whole life. If you have a universal life contract, or if you're looking into universal life contracts, those premiums are not guaranteed. What is guaranteed is their ability to increase the cost on those contracts. That's what your contract will state. It will state a guarantee of the company having a maximum cost that they can charge, which increases as you age and is dangerous. And that is why we do not use those contracts for infinite banking. But with whole life, the premiums are guaranteed. And so as long as you're paying those, your policy will be fine. It will not lapse, and you can keep the policy, and it's going to be guaranteed to pay in your lifetime to age 121 for most companies. Some companies might be age 100, but the companies that I work with are to age 121. Another win for whole life contracts is that they don't have to go through probate. Yay, that is no fun. The death benefit from those contracts goes straight to the beneficiaries and does not have to go through probate, so that you're able to handle things that are important and costs and fees and funeral expenses and all sorts of other things as quickly as possible. Another win, there is guaranteed growth. That is one of my favorite wins. If you're much, much older, you might not see a huge growth in the cash value, but it can still be a win and you can still use it and to be in control of your cash in your lifetime. But it does otherwise have guaranteed growth. And so you can have something in your portfolio, you can have something building wealth for you that is going to be guaranteed to grow, unlike other types of investments out there. And again, this is not an investment, it is an asset. I just want to make that clear. But having something that has guaranteed growth certainly can bring peace of mind, help you sleep at night, not being concerned that everything is at risk of going up and down. Your retirement savings, I don't want all my retirement savings at risk to be lost in the bad day in the market. And so I really appreciate that it is going to be guaranteed, it's going to be there, and I know I'm going to have that cash when I need it. The last pro I'm going to cover, because I'm sure I could come up with some more, is the 200-year track record that whole life contracts have. Whole life has been around a very long time, and it's just been, people might think of it as something that's just a boring thing. It's not for growing any cash. It's just for when you pass away, so they don't really look into it. But it is something that has been around a very long time, and so has a long and solid track record. And I don't know about you, but I certainly do appreciate something that has a very long track record like that. Well, I thought that was my last pro, but then I realized I forgot to mention living benefits. Now, a bunch of those things that I just mentioned are living benefits to the contract and are a part of that. But of course, we also have the additional riders that you can tack on to whole life policies, such as the critical, chronic, or terminal illness rider, where you can access a portion of the death benefit for any of those things, such as a catastrophic long-term care need or something like that. You are able to access a portion of the death benefit, which can certainly come in handy at a time when you really need it, when tragedy has struck. So now onto our list of cons. Now, in my book, there really is only one thing that could be negative, and that would be someone who opens this contract or policy and expects it to be amazing in a few short years, and so they don't think it is, and they don't like the product, or they change their minds and decide, what did I even start this for? And they pull their money out. That is a con, not allowing it to flourish long-term, because it certainly is a long-term strategy and gets better with every single year. And so doing this strategy, thinking it'll be a win for you to do short-term, it is definitely not a short-term vehicle. It is not a short-term strategy. And so that would be the only con that I perceive, is putting your money in and taking it out too soon. However, I did look up what people might think are cons of infinite banking so that I could address those. And one thing that was listed was complexity. And this was referring to just the strategy as it's named, infinite banking concept, that is complex. And I guess when I'm talking to people, I feel like the strategy itself, what you're actually doing, is very simple. It's very dry. You're just building a pool of cash. You're going to borrow against it. It's as simple as that. Your pool of cash is going to be as large as you make it. You're either going to fund it highly and have a lot of cash from which you can do things with, and to give you more opportunity to invest in things that you want to invest in, whether it's real estate or other things. Also, the more that you fund into it, the more you will have for retirement, obviously. And so it's really as simple as that. I think the complexity comes in when we're talking about the why. Why would I do this? Why isn't everybody doing this? What do I have to do to accomplish this? And so teaching the why and teaching how you can flow money in and out and grow your banking system and make it better, that's the information that I feel like might feel complex to some people. What's actually happening very simple. It's explaining why you would want to do this as opposed to something else. That's where the complexity comes in. And that's where it's important that you talk to someone very well trained. An IBC practitioner with the Nelson Nash Institute is a great place to find someone. And so that they can fully explain the why and all the intricacies that go with it. But the baseline is just very simple. Another con that somebody had put out there was high premiums. Now that's not true. You really can you can choose your premium. You can basically come in and you're the one who's saying, here's what my budget can take. Here's what I can fund into a whole life policy. Here's what I have available. And then usually we can work with that. So not very often is it too small that I can't work with something like that. Sometimes it is. And certainly, again, like I just said, the more you're able to do, the better off you will be, because you will be able to have more cash to do more things with inside of your whole life policy. And you also have a larger snowball rolling for you. The more cash that you're adding into it, the more it's snowballing, the more it's getting larger, as opposed to teeny tiny premiums. But it's not a requirement that you have a high premium. And with these contracts, we are shrinking down the death benefit on purpose. And along with that, the cost of the death benefit goes down too. So the higher the death benefit, the higher the cost. We're shrinking that down, so the cost goes down with it. Another con somebody put out there was modest returns. Now you got to keep in mind, this is not an investment like I just stated. So we aren't coming here for rate of return. You can go somewhere else for. These contracts are here where you're going to pool cash that you can do something else with, and these funds will continue to earn for you. So it's completely different than just going out there and trying to get the highest return that you can. This is something where you put safe money, where you put money that you don't want at risk, that you will have access to, tax-free, that's going to be guaranteed to grow. And if you are thinking like a banker and flowing your money like a banker and paying yourself like an honest banker with interest, you're going to end up blowing all those other things out of the water anyway. But coming here for the purpose of what are my returns going to be? Are they going to be amazing? That's not the purpose. That's we're comparing apples to oranges here. So this is going to be better than your savings account. And if you're thinking like a banker and taking the motions to do the right thing, it will be amazing. And you will be amazed at how it can blow everything else out of the water. Simply being able to save more into the contract where you're going to capture guaranteed growth and dividends on those funds for the rest of your life and having them snowball, the ability to be able to use that money and access it whenever you need allows you to save more. And so you're just going to end up with more if you're able to put more in and take it out as needed and put it back, as opposed to trying to save little chunks into some other investment where you're trying to get that higher rate of return. So it's just different. It's a lot different. And so we're not comparing rates of return with life insurance to other investments for sure. And the final con that I found online that people are thinking are cons is the qualification for life insurance. The fact that you do have to get health qualified to be able to acquire a contract in the first place. So sure, that could be something that might be difficult for some people, or maybe they would not be approved at all. That I could see as a con, not being able to easily just start this for anybody. However, if you're married, one of the two of you spouses may be more insurable. If one of you ends up declined, you could write the coverage on your spouse or your children, or in some cases, your parents or other relatives. If you have an insurable interest, you can also write it on business partners. So you should have a life insurance policy on your business partner if you have one. You'll just need to have an insurable interest on that person. So that sums it up for today. That is my list of pros and cons for you. I hope you found it helpful or interesting or useful to you in some way. Please, of course, always feel free to share the podcast if you think that this information could help someone else. If you'd like to work together and partner so that I can look into your situation specifically and help you put together an infinite banking plan using whole life policies for you or your family, I would be happy to. Please reach out to me at Valerie@alphaomegawealth.com. Thank you again for listening in, and I will talk to you again next week. Take care.
This is thepodcastfactory.com.